Today we were thrilled to be given the opportunity to present to Stone Chalk residents in Melbourne. Anthony Bradiker from the tax team, myself and Rita Choueiri from William Buck, a partner in R&D tax specialisation, presented on hot topics in tax as well as the R&D tax incentive. This session was aimed at companies that are growing, innovating and experiencing a lot of change. As part of the tax aspect of the presentation, we covered a number of key planning and risk management opportunities for companies that are experiencing growth, going through a number of innovative types of phases, as well as experiencing change and expansion more generally. From an end of financial year planning perspective, we outlined the importance of understanding your tax compliance framework across income tax, the employment taxes, GST, R&D, as well as the state-based taxes. Key to our messaging today was that understanding your tax compliance framework, including the deadlines, can help you manage your resources more effectively around compliance time, and also really unlock potential opportunities to have the most tax-effective outcome for your business. In addition to the tax compliance framework for most companies, we outlined some key issues and opportunities that come along with expanding and growing. In addition to tax compliance, we looked at the key moments in a company's life cycle. For example, when a company is growing and expanding, how do you attract new investors? How do you attract and retain talent? And what are the considerations involved with creating new entities and structuring? There are a number of tax obligations and tax triggers which can result in either good or tricky outcomes for companies. And these are some of the areas we considered today during our session. Concessional provisions do apply for a number of these types of events. It's imperative that companies understand what concessional opportunities might apply to their circumstances at the various stages of their life cycle. In particular, eligibility and whether companies can use concessional treatment across these taxes is important. As part of implementation, it's essential that companies get the process right and have the appropriate records to document the positions that they've taken.
Today we gave an overview on the R&D tax incentive, specifically to startups with the tools to help them self-assess their R&D activities and to give them some details about the process to claim the R&D tax incentive. The key takeaway for companies is that they need to plan for the R&D tax incentive and ensure they're keeping on file contemporaneous documentation to substantiate their R&D activities. With the R&D tax incentive, companies have 10 months after financial year end to lodge a claim with AusIndustry. And after that, they also need to lodge an R&D tax schedule with the income tax return. Some of the key contentious areas in relation to the R&D tax incentive is ensuring that companies are correctly demonstrating the R&D and articulating it to AusIndustry. As the R&D tax incentive is a self-assessed regime, it's important to speak to experts and get assistance from experts around the R&D tax incentive to help you assess against the eligibility criteria as stipulated in the tax law. And that's something we're able to assist our clients with. So if you believe you're conducting eligible R&D activities and you need some assistance in navigating through the R&D tax incentive law, please reach out to us, come to the experts, we're here to help.